Hey traders, welcome to this week's Forex Focus. I hope you are all doing well and you've all had a good week in the market. So we're certainly some nice moves out there to be traded and some profits to be taken. So I hope you managed to get some of those. What we're going to do in this week's show, as always, we're going to take a look at the major currency pairs for the week ahead. We're going to identify the key levels that we're looking at and ultimately how I'm expecting the markets to play out. Now you have to remember that this isn't trading advice. So I'm telling you what I feel is going to happen in the markets. You then go away and take this video, look at the ideas that I present and see if it fits in with your own portfolio, of your own strategies and your own view. Okay, so this is really just kind of a bit of a heads up as to what I'm expecting of the markets to help you identify opportunities for the week ahead. So with that being said, let's jump across to the Australian dollar US dollar chart and take a look at how we can play that out. So if we look at the Aussie dollar, we can see here that it reacted to this previous level of support that we've had highlighted in for a while now. So Monday we traded directly into it, and then Tuesday, Wednesday, Thursday, the market then sold off away from it. So if you manage to take that trade there from that level, you should be in there with some nice profits. If you haven't already taken profit. Now, looking at the weekend, one of the things that I would pay attention to is this upward sloping trend line over here. So this could potentially provide some support for the market for it to kind of bounce from here and rally up into our second level. So if you are holding a trade from this position over here, then I would consider moving your stop to break even just to protect that in case we get a bounce, because as we know, and as I said last week, the US dollar, it is a very erratic currency at the moment because of what's going on in the US. So from that perspective, we can't expect too much follow through and things. So we want to be in and out of the market as quickly as possible and play as defensive as possible, so that we're not leaving ourselves overly exposed to a move that's got nothing to do with the trade setup, but has got something to do with, for example, what Trump says in the US or something to do with the trade wars. So that's how I would play that at the moment. Look at moving your stop and at break even. If we get a break below this trend line and you're not already in there, then that could be a good signal to take this further short. I'd keep an eye on the support level over here at 0.6186. With a view to the market moving down towards 0.6096. But as I said, I'm not expecting a lot of follow through from the market, so keep your stops in there fairly close and look to take profit fairly quickly. The next opportunity is in the euro dollar. So the euro dollar, we've completely changed our view. If you remember a few weeks ago, we were obviously looking at shorting the euro dollar. Then a few weeks ago, Germany came out and talked about their defense spending, and then tying that with what's going on in the US at the moment and some other fundamental data, it's kind of pointing to the fact that the euro is probably going to be stronger going forward than the US dollar, or at least it's not going to continue to get weak. So we're either going to see a bit of a trend here or more of a range-bound market, and in either case, that provides us some protection when we're looking to buy the markets. Now, I've identified the 1.0770, and then below that, the 1.0663 levels as key areas of support where I would look to initiate a buy position if the opportunity presents itself. Now, the way that that's going to, manifest itself for you is obviously dependent on the strategy that you're looking at. The way that I tend to trade these markets is that I will take immediate bounces from the levels, so I don't wait for a lot of confirmation there. I use the ATR here, so 2 ATR as a stop. So let's say, for example, I was to buy here. I'd buy without waiting for confirmation. 82 pips is the ATR, 2 times that, 164. We'll round that up to 170. Which essentially would give you a stop loss of something like that down here. So I'd have one position on at that level there, and then I could have another position come in at this level over here if the market were to go against me, because I got timing wrong or whatever the case may be. But I wouldn't be waiting for confirmation on those. I'd just be taking the immediate buys from those levels. Moving on to the pound dollar. So the pound dollar we've got a similar setup to the euro dollar, although we've got a little bit further for the market to go before it hits the support levels that we're willing to trade from. So The first support level for the euro, for the pound dollar is going to be 1.2805. If the market can get there, that's where I'd look to initiate a buy. If the market breaks through there, then I would look at initiating a second buy down at 1.2613. Okay, so we've got a first position over here at 1.2807 and then a second buy down here at 1.2616. And you may ask yourself, why are you taking two positions? And I've explained this on a few occasions in these videos, but ultimately, when you're looking at trading the markets and you're looking at trading with a view, you can't expect that the very next candle or the very next move is going to be exactly the move that you're expecting. So the way that I've developed my approach to trading, the way that I teach my private trading clients to trade is basically to be a little bit looser with our stop losses and to be a little bit more flexible. So as opposed to just making it a binary outcome where you take one trade and it makes you money or it loses you money, you give yourselves the best opportunity to be able to come out with a profit by identifying a few areas that you'd be willing to buy and then trade a portfolio of trades within a particular currency pair, which ultimately gives you a much higher probability of coming out with a win, of coming out ahead of the game. That's something that works for me and works for my trading clients. So if you're wondering that's kind of the reasoning behind it. Moving on to the New Zealand dollar, so similar sort of thing as the Aussie dollar. Monday, the market broke through our first level over there. So if you took yourself from that position, you would have spent a few days with the market underwater. It didn't quite get to the second opportunity over here before turning around, and currently you'd be sat in a little bit of profit right now and waiting for the market to break lower. I don't necessarily see a second opportunity here unless you want to sell through the 2-day low on to Thursday's low over here at 0.5724. That would be the only way that I could see getting in on this particular trade right here. So if you're not, then I'd wait for the other ones. If you are in this trade, then you'd be targeting or hoping to get out before the 0.5590. So we don't want it to go on and break any new lows for you to be able to take your profits. We want to be out, way before then. And as I said, we're looking at the majors. The majors has the US dollar as one of the constituents. So from that perspective, we don't want to be holding it for too long, because there is obviously that opportunity that the market turns around, not for a fundamental reason, not for a technical reason, but more a short-term sentiment-based reason, which is much harder to obviously trade, which is why, as I said a few minutes ago, we want to be very defensive with our positions, okay? We want to be in and out very quickly, book small profits, but do it consistently and do it often. The dollar CAD, I'm staying away from for the moment, so we won't say much about that. The dollar franc, we've been saying that I feel that this is one of the pairs where it is going to appreciate over the course of this year. So far, I've been made wrong on that, so the market's just kind of gone against us. We've been waiting for it to come back to support level, which it did over the past couple of weeks. So a buy from this level over here makes complete sense to me. If you're not already in and you want some extra confirmation, then I'd be looking for a breakthrough this resistance area. So very temporary resistance area over here, but the 0.8866. And the reason for that is if you look at the dynamic of this price action over here, the market has sold off to this previous level of support there. It then attempted to rally, it then sold off again, and it came back to that same level of support where buyers came back into the markets. Now, I think any sellers that were in here would have their stops above this level. And a lot of buyers that are waiting for extra confirmation that there's going to be a resumption of this big trend over here will probably have their orders above here. So we've got every likelihood that if the market breaks through 0.8867, that we're going to get a momentum move to the upside. Not necessarily all the way to the highs over here, but certainly, enough to be able to take profits if you're trading with a 2 ATR stop and a 2 ATR profit target. So the ATR here is 61 pips. If we put that in, say, above those highs there, 2 ATR, so we're looking at around 120. Takes you in just below that level over here. And then on the upside, you're able to take profits literally on a one-to-one basis before you really get to any of the significant highs over here. Yes, we need to kind of come to this previous high there, but you're able to take profits before you sort of start attacking the ultimate highs, which I think you've got more than enough opportunity to be able to do. Then finally, we have the dollar yen. So the dollar yen has been moving to the downside. It did break through this support level over here on the 3rd of December at 148.65. It broke through there, but crucially, it didn't hold below there. Now we're at a bit of a key level, and the market could go both ways. If the market reacts to this trend line over here and breaks down, I'd be looking at a break of 14653 to give me an indication that the market would move short, and then I'll be looking to sell that down to this upward sloping trend line over here. So if you see, we've got this trend line here, and then the market breaks through here, I'd be looking for it to come down to that level. If the market were to break up, okay, so it broke above this level here, then I'd be looking for an immediate buy, but, well, not an immediate buy, I'd be looking for a buy. But the one thing that would be preventing me from taking an immediate buy is if we take a look at these longer term resistance levels over here, at the 151.94, we've got it there on the 21st of October 2022, then again on the 31st of October 2023, and then again on the 14th and 15th of November 2023. It is quite a big resistance level, so I'd probably wait for the market to close above that level, the 151.97, before I start initiating buy positions. Okay, so that wraps it up for this week's Forex Focus. I hope that gives you some ideas on how to play those major currency pairs. If you've got any questions, please feel free to post it in the comment beneath the video. Please make sure that you are subscribed to the channel. You've hit the bell so that you get a notification as and when I release these videos. Obviously, give it a thumbs up if you like it. That would mean a lot to me. And yeah, have a fantastic week in the markets. And I look forward to speaking to you on next week's Forex Focus. Take care now, and I'll speak to you all soon.